Hi, okay, let's go ahead and get started. It's Mary Ellen McGonagle, and I want to say welcome. Today we are going to be reviewing that all-important characteristic known as volume in your stock, and we're going to be putting it together with some technical indicators so that you can spot activity in the markets as well as in your individual stocks, and you'll know how to respond accordingly. So let's go ahead and get started. As mentioned, this is Mary Ellen McGonagle, and I'd like to give a bit of a background. For those of you who are unfamiliar with my work, I do have over 25 years of experience, Wall Street related. I started out as an assistant on the fixed income trading desk at Goldman Sachs. And then from there, I went on to what's called the buy side. I eventually was a portfolio manager of over $2 billion in assets, also on the fixed income side for a large insurance firm in New York City. Very, very exciting. But things really got exciting when I moved out to the West Coast with my then new husband, and I had the wonderful opportunity to work with William O'Neill & Company. He is the founder of Investors Business Daily, and they have an institutional division that works with portfolio managers and analysts throughout the world. So it was there that I had the great pleasure to work with many top fund managers, advising them on the markets, reviewing charts, reviewing the markets historically, and studying stocks. Just a great experience. Now, more recently, I have started my own research firm, MEM Investment Research, where I continue to work with institutions, but I've broadened out to help self-directed and individual investors help decipher the markets and uncover these big winning stocks. My research company, we put out a bi-weekly newsletter that talks about the broader markets, identifies stocks that are poised to outperform. And also I have a number of educational courses that are designed to, again, familiarize individual traders with characteristics, what to look for, how to uncover those characteristics, and so forth. So I urge you to visit my website, MEM Investment Research, for those that would like to get a little more information. But let's go ahead. Before we begin, I'm not going to read this entire paragraph, but it's important to know that I am going to be using a lot of historical charts for reference, and none of the information we're reviewing is designed to be either a buy or sell recommendation. It's purely for education. So let's start with what we're going to be covering here today. The first thing we'll review is why volume, price volume on your chart is so important. And then we're also going to review the 5 different items that volume in a stock can signal, what that volume can be telling you. And we also are going to be reviewing which technical indicators work best when you see this big volume. And that's going to point us toward those 5 items that this high volume is telling you. And then we're also going to review accumulation versus distribution in a stock and how you can use this metric, again, with that volume to really provide you with some insights. And then lastly, using history as a guide. I mentioned that. We're going to be reviewing a number of examples. Really looking at stocks historically is going to be super critical and important for your education, because history does tend to repeat itself again and again. And so let's go ahead. We can get started at the very beginning. I talked about why volume is so important. And one of the reasons that you need to pay attention to volume in your stock is because this volume is telling you that institutions are becoming active in that stock. And of course, the reason that's important is because these big institutions, they're managing billions of dollars. These are the guys that are, in essence, creating these charts. Their buying and selling leaves a huge footprint in the markets. So, of course, you need to pay attention. Individual investors trading is not going to move the needle so much, but really when these institutions come in, it's really going to make an impact. And the other reason to pay attention to this volume being driven by institutions is because institutional money is viewed as what I call smart money. And the reason is a lot of these institutions, they have access to and they have the time and resources to uncover information that an individual investor might not get to. As you know, we all now do have access to the same information thanks to new regulations, but realistically, these institutions have a lot more feet on the ground. They have, again, a lot more in the way of resources to uncover this information. So when they begin either buying or selling, you see a pickup in this volume, it's really going to be important for you to pay attention to it. And so, as mentioned, when you see the volume pick up and the institutions come in and begin buying, it's equally important when the volume starts picking up on the downside. In other words, institutions are looking to exit a stock. They may feel it's highly, the valuation is high, or that they may have information relating to the company that may impact it negatively. So let's review what high volume means, and I'm doing this so that you can know what calculation would be best for you to pay attention to. So when we say high volume, what you want to do is measure the volume of the stock on a given day versus its average over the last 50 days. And that's a fairly common metric on a lot of trading platforms. If you don't have the ability to have that presented to you, really simply eyeballing the volume can be quite effective as well. But up on volume screens are very standard nowadays, but as we review today historical examples, we are simply going to be, as I say, eyeballing it. But as a measurement, generally speaking, you want the volume to be above what's called average, and that's the average over the last 50 days. Now, another item that we will be covering today, I talked about this briefly, is whether the stock is under what's called accumulation, or is the stock under distribution. So really, quite simply, when a stock is moving upward on above average volume, that is considered a stock that is under accumulation. That's bullish for the stock. But on the other hand, distribution is when the stock's being sold on above average volume. So really, we will get into looking at a couple of examples where you can plot that accumulation versus distribution so that you can visually see whether the stock is under accumulation or distribution. And I can give you the calculation. Basically, what the accumulation distribution line is telling you is when it's taking a look at the price action on a given day, and it's looking at where the stock price closes relative to the high and the low for that day. So as an example, if a stock closes in the upper 60% of its price range for the day, that is positive. The calculation then takes into account whether that action took place on volume. And if that's the case, then the stock is under accumulation. So I think this will become more clear as we begin to go through some of these examples. So let's go ahead and get started. So I talked about 5 different things that above average volume can indicate for a given stock. And the first one, quite simply, the institutions are involved. We talked about the importance of taking note and paying attention to that. But there is another item that can be occurring. When a pickup in volume, it could very well be the beginning of an uptrend, and that's absolutely ideal. We'll get into some examples. When an uptrend begins, if you see this volume, it's really going to give it some power some momentum to continue with that uptrend. And then likewise, the stock could very well be in the beginnings of a downtrend. So again, we'll look at examples so you'll know. And fourthly, volume, we can notice it can be indicative of what's called a divergence. And this is where that accumulation distribution comes into play. For instance, if a stock is going up in price, but the accumulation distribution is not, it's going downward. That's what's called a divergence. A lot of hedge funds use this type of action to short a stock. So a stock is going up, but it's not being supported by any kind of volume. So we'll get into some of those. And then also when looking at volume, it can very well indicate that an industry group or a sector, it may be rotating in or out of favor. If you see a big pickup in volume, the underlying stocks within that group are coming either under selling pressure or are being supported. So let's take a look at how you can pinpoint your entry and exit points when various occurrences happen. So the first one is if a stock gaps up on volume, most likely you will want to buy the stock on a pullback. You're generally not paid to follow or chase that gap up. We will look at an example with this. Or sometimes after gapping up, the stock will just sit and digest that gap up. But generally speaking, you're not usually paid to chase stocks after they gap up. However, they oftentimes will continue to go up. And then when a stock breaks key support on volume, you will want to exit the stock. We'll show you examples of that. And when a stock breaks out of what's called a base, for those of you that are not familiar with this terminology, I do offer other courses that go into detail with that. And these bases are periods of consolidation for a stock. And when a stock breaks out of that base on volume, you are advised many times, given other positive characteristics, that is a good time to buy. So you do want to have a system so that you can screen for these high volume events, because you can see how critical they can be to your investing as far as helping you either get in or out of a stock at a timely fashion. So let's take a look. Here is the very first example. What we're looking at here is NVIDIA Corp. This is a daily price chart. This is taking us back to the 2015 or 16. But regardless of the time period, what I did want to point out to you here is that each bar of activity on this chart is 1 day of activity. I do see some questions, and I wanted to mention that I will spend as much time as needed at the end to answer any and all questions, so please feel free to post now or at the end. But let's take a look here. So each bar here is 1 day of price activity for NVIDIA. So what I wanted to point out to you here is going back again, this is late March 2016. The stock gaps up in price, and take a look at this volume here. We're just again eyeballing it, but you can see it actually had a smaller gap and then a larger gap up, but both of these occurred on very high volume, and you can see that indeed this gap up was the beginning of a significant move up. So the other we actually, in this case, have 2 separate gap ups. Here we are in the beginning or mid-May, and we have another gap up in price. And the volume, as you can see, is absolutely huge. So this gap up here, again, is another significant indicator the stock does go on to advance. Now, what I wanted to show you is this same, and I'm hoping it's not too busy, but here is that very same daily price chart of NVIDIA, the same time period. What I've done here is overlaid these technical indicators on top. So what I'd like to point out to you here is when you see these, in this case, we're looking at gaps up on big volume, when you can put this action together with positive technical indications, that is really going to add power to your buying decisions, because what we have up here is what's called an RSI, that's your relative strength indicator, and this dashed line is your net neutral. So when the RSI line trends and goes up above that net neutral into positive territory, that's very constructive. Let's go ahead and move down, because what I'm trying to show you is that it did occur in conjunction with this gap up. We also had the price moving up above these key moving averages. That's what these colored lines are here. The green is your 10-day simple moving average, so it's taking the average price over the last 10 days, providing you with a smoothed out line. And the blue is your 50-day simple moving average, while the red is your 200-day. So what we have here is the price gap initially gaps up above that shorter term 10-day moving average. From my work, it doesn't get truly interesting until it's able to break up above the 50. So now you may have missed a bit, but at least you know that the gap up is more likely to continue once it breaks up above that 50-day moving average. And down below here, we have what's called the MACD. That's your moving average convergence divergence. This is another momentum indicator. So you want to play, the black line is your MACD line. The red is what's called a signal line. So in addition to paying attention to the slope of this indicator, you also want to pay attention to the position. So this area here is your net zero. So you had the positive crossover here that was in line with the break above the key moving averages, as well as an RSI going into positive territory. Then once it gets above zero, this MACD is even more positive and powerful. So you certainly may have other indicators that you work with and use, but when you can put those indications together with this type of gap up action, it's really going to, again, give you that confidence to know that an upward continued move is very highly likely. So let's go ahead and move over to this other gap up, and we can see quite simply the very same phenomenon with the RSI turning positive. The stock was already above its 50-day. The gap up occurs on huge volume, and your MACD has this positive crossover above the red signal line. So again, ideally for an astute investor, you would take note of, again, not only the volume, but how are the indicators? Are they also flashing in a positive fashion that would get you into the stock? Let's go ahead and move on. This is another daily price chart. This is a much more current chart. We're looking at, actually, I believe it's from yesterday, and this is Amazon. So again, each price bar on here is 1 day of trading activity. And so we're looking at the period from the end of the summer into late October. Amazon really did not do much. A lot of stocks stalled during this period, but we did see this huge gap up here on big volume. So this particular volume on this day was 400% above the average volume for Amazon. So that's absolutely obviously quite huge. And what you can see again in conjunction is this RSI trending up positively. And then you also have that MACD crossing over in a positive fashion. And the stock, which had been below its 10-day moving average, it did break back up above that. So we have a lot of positive occurrences, and of course Amazon has gone on to do quite well. Now, I did also point out here to the right, for those of you that are familiar with candlestick formations, I wanted to point out this action. Now, this is in line with the recent deterioration and correction that we had in the markets. Amazon, as did many stocks, broke down. But in this case, the stock dipped just below its 200-day moving average. But what I wanted to point out to you is how the stock, after dipping below, it closed in the very upper portion of its trading range for the day. We talked about that being accumulation. And take a look at this huge volume. And it's indicating that the stock, once it got down to this level, the buyers just rushed right in. This is a very bullish occurrence. Again, if a stock breaks key support and the buyers rush in and it closes in the upper portion of its trading range for the day, that is quite positive. So I wanted to point that out as yet another way that you can use volume in your trading as a way to signal a potential future movement. So let's go ahead and we're looking here at a monthly price chart. So each bar of activity is 1 month. And the reason I'm using a monthly is because I wanted to show you stocks that were able to really come out of this 08-09 bear market. This is Biogen, and some of you may recall that in 2011 a number of biotech stocks did go on to great heights, but the bigger point here is the same characteristics that we've been reviewing in those daily price charts can also be applied to monthly, and we will be reviewing some weekly price charts as well. So take a look. This is the beginning, the first quarter of 2011, and you can see the stock. This is, I talked about base building. This is an example of a saucer base, and so in this case, this is Biogen, and the stock really had a go nowhere type of action for well over 3 years. The stock just bounced around, but once we did have what's called a breakout, it breaks above this prior high. It does so on huge volume. That is your signal that this particular stock could very well be on its way. And of course, we can see the significant advance. This is a 4-year advance out of this base subsequent to this huge volume breakout. So we talked about being able to use this volume to help you identify rotation, either industry groups. In this case, we are taking a look at the financial sector. I'm using XLF, which is the S&P Spider Financial Sector Fund. And this is another recent chart. So it's current time period. What I did want to point out to you is this huge volume pickup here. Now, this is the end of November into the very beginning of December. There was a lot of debate as to whether the Federal Reserve would raise interest rates at their December meeting, and this is going into that meeting. A lot of bulls came out of the woodwork, so to speak, because what you can see here is, again, a rather go nowhere and then even a dip in this particular sector. But this is what you want to pay attention to. This first bar here, take a look at the volume. So XLF, this is a daily price chart. It broke up above this 10-day, and it should be 50, but unfortunately it's 40, but the 50 would not be significantly different. It breaks above these two key moving averages, and then in conjunction you have the RSI turning positive and sloping in a positive fashion, and then the MACD also giving you that signal. So hopefully you can see how all of this is occurring in conjunction with this huge volume. And of course we can see that financials, after digesting these huge gaps up, have gone on to greater heights. So that's how you can use this volume and these indicators for sector rotation into the financials. So Here we are looking at a weekly price chart. We haven't looked at a weekly one before, but this is a company called Shopify, and it's, as you can see, has been a big winning stock. Again, this is a more current price chart, but what I wanted to point out to you here, it's not quite as evident. There are other charting services where this volume would really pop out, but hopefully you can see relative to the prior volume bars, it's at least double the average. So again, we are talking about that base. This is a saucer base, and the stock breaks out of that saucer base on very, very big volume. And you can see how significant the advance beyond that is, but also important. Again, this is weekly. You do want to make sure that your other indicators are also flashing positive. MACD was in the upper portion, it was positive, but it also had that positive crossover, and RSI, which was positive, but it started trending in a more upward positive fashion, again, right in line with this breakout. So in addition to being able to spot accumulation, we've been covering a lot of that. Let's go over here to Shopify and take a look at what distribution looks like. So in this case, we are looking at a weekly. So the red is the 10-week or the 50-day, this red line. So what I want you to pay attention to is this break down below this 50-day moving average, and take a look at this huge, just off the grid volume. This was on an analyst recommendation that the stock was overvalued, and it really spooked a lot of people. So this breakdown below this 50-day on huge volume, for a lot of people, it would be, particularly if you were a more active trader, that signal would be a signal that you should exit the stock, because realistically, the stock was in a go-nowhere environment for about 4 months before resuming their uptrend. Those of you that are longer term and you're looking at a weekly price chart, the RSI did still remain above that net 50 neutral. Your MACD, while it had a negative crossover, it was still above this net neutral. So a longer term investor could stay with the stock. This would be institutional investors. The stock still is above its key 200-day. You could have stayed with it, but for most active traders, this type of action on huge volume breaking below the 50-day would be ample reason to exit the stock and put your money to work elsewhere. So here is an example. Earlier I talked about accumulation versus distribution. So what I've done, this is Salesforce CRM, and this is taking us back to 2016. I've put the accumulation distribution display up above where the RSI was for the prior charts that we've been reviewing. So let me explain to you what you want to pay attention to. This is using stock charts. Many other displays might be a little different, but in essence, you want to pay attention to, this is the accumulation distribution line. This is your signal line. So we're looking for not only the slope and direction of this line, but also the crossover. So in this case, we're looking at a crossover below. So what I wanted to point out to you is you can see that this negative accumulation distribution occurred. Actually, it started trending negatively prior to the stock's break below this key 50-day moving average. So you can see that in essence that we had this one-day rally attempt. And for those of you that are active traders, you might get excited and think that the stock was reversing its downtrend. However, if you were paying attention to this accumulation distribution, you would know that the stock was still very much under distribution, that this would not be a signal to purchase the stock on that rally attempt. And so we can see again how powerful, because the signal line is now sloping downward. So despite these rally attempts, both the accumulation distribution and the signal line are trending downward. So you're not really getting that signal to enter the stock. I do have other examples with that. Okay, here we are. This is Barrick Gold Corp. Again, another daily price chart. We're going back to 2016. So what I wanted to point out to you here was a concept that I mentioned. It's called divergence. So we are looking at a daily price chart, and I have a 50 and a 200-day moving average on here. So let's take a look at this period here in particular, where Barrick Gold Corp was rallying. In fact, it was hitting new highs here. However, if you take a look at this accumulation distribution characteristic, you can see that it is generally trending downward during this rally attempt period, and then we have this negative crossover prior to the new high. And you can see how this signal really quite powerfully is telling you that this breakout to new highs is not one that should be bought. The stock is really under quite a bit of distribution, and you can see how it did go on to break below this 50-day moving average. Take a look at this volume, huge volume here. So even had you stayed with it here, ideally you would use this break as an exit, because it is being confirmed by this negative distribution display. So here we're looking at Burlington stores, and what I wanted to point out to you here is, again, what we already have been reviewing. So here is the stock. We're taking you back to 2016. The stock gapped up on huge volume. Hopefully you can see that big volume. And a lot of times these gaps up are, and on volume, are related to earnings. And of course they can gap down on earnings as well. But looking here, you can see where the stock did gap up on huge volume, and this is being confirmed by a now positive MACD as well as a positive RSI. So again, we do have another huge, this is a daily price chart. This is when the company they raised guidance for the upcoming quarterly earnings, huge volume, and you can see following the gap up where the stock just consolidated for quite some time. But let's go ahead and move further down the chart and take a look at some of the activity that would signal to you that the uptrend may be over. And again, we are going to pay attention to volume. So here we have a breakdown below this green line is your 10-day moving average. Take a look at this. Again, it's not really clear, but other charts will tell you this is big volume here on this breakdown. We have the MACD trending downward, RSI turns negative, and then when it breaks below that 50, you get really big volume. So that is going to be an indication, again, using that volume together with those indicators, that it's time to exit the stock. Here we're looking at Burlington. Again, this is a more recent price chart, and in this case we're looking at a weekly, and I wanted to point out to you that similar concept of a base. This is a saucer base pattern, and it takes place over a 15-month period. But what you want to look at here is the breakout. Take a look at that huge volume, and it's being confirmed by your other indicators that there was an advance potential ahead of the stock. Here's another example of that divergence that I talked about with the accumulation distribution. And what I wanted to point out to you is the money flows in this case are trending upward while the stock is trading sideways. So what I'm pointing out here is this period. You can see the money flows are trending up, but really the stock is in a go nowhere environment. But for an astute investor, the real action as far as the daily price action where it's closing relative to the daily action and the volume, you would get an indication that the stock was poised to head upward. And then indeed it does eventually gap up on very big volume. And during this period, the money flows or the accumulation distribution continues its upward trend so that you could know to potentially stay with that stock. In this one, I also have the RSI as well to help give you that extra indication and that extra confidence. So here's a look at a negative. This is a weekly price chart of Chipotle. As many of you may know, this stock came under huge distribution toward the end of 2016. So what I'm pointing out here to you is with these arrows, huge above average volume here, and we're seeing the stock break down on huge volume. And of course you can see just how serious that break was. And the RSI in this case is confirming that, and the stock very much goes into a decline. So it broke not only that 50-day, but it also broke below that 200-day on big volume. And then another look at Amazon. This is again back at 2016, but just quite simply taking a look at this volume, stock breaking out of a base on big volume, telling you that this downtrend has been reversed. And then also another sector rotation. We talked about groups and sectors and being able to spot rotation in and out using volume. This is the industrial sector spider fund, and so it's going to be industrial related stocks, transports, heavy construction, and so forth. So what we're looking at here is this huge, this is a weekly price chart, so we're looking at a huge 1 week advance on big volume. This is directly following the Trump election at the end of 2016, and again this big move, huge volume being confirmed by your indicators, and the industrial sector for 2017, it was the second highest performing sector, and that was next to technology, which had a huge year last year. But I wanted to more importantly point out to you how critical using these volume characteristics are in pointing you towards shifts as far as rotation in or out of a particular grouping. And then you can also use these volume characteristics, of course, with the broader market indexes. It's really going to be quite powerful. This is a weekly price chart. We're looking at, this is the end of 2015 into the beginning of 2016, a rather ugly period. But here you are going to want to key in on volume as well as price action to point you toward a market that is under heavy selling pressure when that volume picks up, as opposed to once the pressure began to lift on the broader markets, and this is taking us into February of 2016, you want to see these upward moves occurring on heavy volume. And that is the case. It's giving you an indication that the markets very well may be righting themselves. So let's look at some conclusions. We've reviewed a fair amount today. You can see, hopefully, that using volume to time your trading is really a very critical tool. So you do want to be sure and have a system in place, whether it's an up on volume screen that's alerting you. You can do a daily or a weekly screen for those that are longer term. And then know yourself. If you're devoted, of course, I encourage you to get a system in place and educate yourself. For those that are less inclined, perhaps subscribing to a newsletter. I know with my work, I do a lot with charts, volume, pointing out rotations in and out of stocks and so forth. And that's yet another way that you might want to educate yourself further as far as using the various characteristics we've reviewed today. Oh, I have one more chart. I forgot that I'd slipped this in. It doesn't have a heading, but it's very much more of the same, a daily price chart of Bank of America. And this is taking a look at 2017 when again, this is post-election. A number of big banking stocks started to come into play. So we had these big gaps up. Institutions are in there buying. Take a look at this huge volume. And so we talked about stocks consolidating after having big moves. And this, of course, Bank of America daily price chart, no exception. But then we do have this breakout here of that consolidation occurring on big volume. So just a lot more of what we've gone through, but this chart also shows the distribution and what that looks like. Huge volume here. When the stock RSI turns negative, it breaks both key moving averages. Again, this is absolutely must be paid attention to. This big volume very well could be indicating a shift in sentiment. So that was your little bonus chart. Let's carry on here. Oh, I do have a special offer for those of you that would like to find out more. A lot of what I've reviewed today was centered and focused around what are called momentum stocks, and that's my expertise from my many years, 15 years with William O'Neill and Company. And so this is a course that will teach you not only how to uncover momentum stocks are fast moving stocks. They move much faster than the broader markets. So to have an ability to uncover these fast moving stocks, it's also going to instruct you on how to then trade these stocks once you've been able to uncover them, how to enter and exit these stocks. It's going to be critical. And this is actually, it's only $9 today. Wow. Usually it's quite a bit more. So there should be a link in the chat box for those of you that are interested. But this is a wonderful course. Again, it really encapsulates quite a bit of information and helps you uncover these big winning stocks, and then also advises you on the exit strategies. I've said this many times, how important it is that you have a strategy in place to trim and cut your losses so that you can retain your profits, and that's going to be a critical part of your trading. So there should be a link there for those of you who are interested. But let's go ahead and review some of these questions, and anyone with any more questions, of course. So okay, Bill, I am reading your, it says, we little gnats want to ride the back end of the beast, not get underfoot. Maybe we can get up front, right up front. Well, I'm not exactly sure if you wanted to rephrase that because you're often much better served to not try and guess and get what's called in front. Paying attention to what's going on a daily, weekly basis, and then following suit depending on what the charts are telling you is going to be much, much more profitable. So use volume or something like OBV indicator. And Bill, I'm not familiar with the OBV, so if you could provide a little insight into that, I'd be happy to compare using that versus volume. Jim, you talked about a big gap up like that on NVIDIA, and it says, of course, the RSI and MACD are going to move up suddenly after the fact. Yes, they are. But the bigger point here is that move up is not only going to confirm a potential upward move, you're going to want to pay attention to those characteristics as the stock continues to trade. They are not going to gap up prior to a gap up in price. They are simply mirroring what's going on, but they are super, super good tools to use. And okay, Henry was talking about fossil, and yes, I believe it was up over 40% yesterday. FOSL is the ticker symbol, and it had a huge gap up. And similar to the examples that we've been reviewing, you will want to use those other indicators to help you time an entry. We're in a super, super momentum stock period in the markets, so these gaps up should not be ignored. Oftentimes they can be indicators of indications of continued move. Not always, of course. And then Ray was asking about comparing MACD to the stochastic momentum index, and that's actually a very good question. I use the stochastics to gauge what's called overbought and oversold conditions. And for those of you not familiar, you can get a definition of stochastics. I know stockcharts.com explains it in great detail, but the stochastics are very, very good at gauging what's called overbought and oversold. And it's been super helpful for me during this period to identify this most recent uptrend turn in the broader markets. I used those stochastics, but it's hard for me to show you here. But I do have other work that provides those examples where you're looking for a turn, either when the stocks or the markets are overbought or oversold. Stochastics are super helpful. The next question is, now on Apple, volume is picking up and so is the accumulation distribution. Yes, and again, unfortunately, I don't have a live system to review that, but Apple indeed has been having nice upside moves on volume. There is quite a bit of accumulation going on. Potentially institutions that left the stock to the side recently are getting back in. Oh, Bill asked for the link in the chat box, and I was told that that was done. Let me just take a quick peek here. Oh yeah, I believe it is, yes. Oh yes, so it was just put in, Bill, so you're all set. And oh, James, yes, actually they did just put the link in. I apologize for that. It's in the chat box, so you should be good to go. And then Richard wanted to know, do your methods and indicators work as well with futures, the S&P minis? Yes, these indicators do. They work with any kind of futures, commodities, you know, for instance, getting in and out of gold. These indicators are quite effective in those areas as well. So, okay, Bill was talking again about elephants as the big money. On balance, volume is, oh, on balance volume, I'm with you. Yes, yes, Bill. You're right. So, in other words, I'm not super familiar with it, so I'm not going to comment, but I have certainly heard of that, and that's something I will review in more depth. Thank you, Bill. And JJ, thank you as well on balance volume. I apologize. I'm sure it's quite a basic indicator that I should be aware of. I will go ahead and look into that. Now, George said in some weekly charts you use 10 and 40 moving averages, and some other weekly charts you use 10 and 50. Why the difference? And that's a great question. So when you're looking at a daily price chart, you do want to use a 10-day and a 50-day. And when that then reverts to weekly, and I'm sorry, also on the daily, the 200-day. So when you're looking at a weekly, that 10 is then going to be 10 weeks of price activity. So 10 weeks of price activity is 50 days, and then 40 weeks of price activity is 200 days. So it's important to know, if you're looking at a daily, you want to use 10, 50, 200 days, and then on the weekly, 10 weeks and 40 weeks, which when converted, become that 50 and 200 day. So hopefully that makes sense. And then Jez, Berkshire Hathaway's been buying over the last few weeks. I'm certainly familiar with this stock. It's been certainly a nice performing stock, Jez, but I'm not sure if you mean the company has been purchasing, Berkshire Hathaway has been purchasing other companies. But quite a bit of the accumulation that you're seeing now is being driven, quite frankly, by institutions that are bullish on the outlook for the broader markets. So whether it's Berkshire Hathaway or other stocks, we are seeing quite a bit of volume here recently. And then someone else asked about the promo code. It should be there in the chat box, Ofer, so you should be fine. Richard wanted to know, is the accumulation distribution indicator easily available on most chart systems? I understand that it is. I, for presentation purposes, use stockcharts.com, and the reason for that is because they allow individuals to do that, but also most of their services are free of charge, and that is where the accumulation distribution overlay that you saw, that's where that emanates from. There are other services that I use actively that actually Stock Charts would be the only one that I'm familiar with at this point in time. Some of the other services I have are institutional level, and they have it. So I'm not quite sure where else you would be able to get that, but if anyone that's on this webinar still has any ideas, that would be great. We can let Richard know. And Joe, he likes the accumulation distribution. Yes, that is a super, particularly when you're picking up on those divergences. They're little telltale signs that can be really quite powerful. Al wanted to know, will we get the recording? Yes. And I believe Mike is saying that he missed part of it. Yes, you will get a recorded version of this. And then also Mike was asking about RSI and MACD. Some confirmed with RSI and stochastics. I don't believe I used stochastics today, but it is certainly a very powerful indicator to be yet another confidence builder that your stock is poised to go either up or down. We talked a little bit about stochastics, and for those of you that are unfamiliar, I maybe use that as a target objective in one of my upcoming webinars. I'd be happy to review stochastics because I do view them as really quite helpful. And okay, yeah, Peter was asking about the discounted special offer. Okay, super. So, gosh, John was asking about the promo code. It should be in the chat box, so you should be good there. And then, oh, Jez was talking about Apple. Yeah, the accumulation distribution, Jez is telling us that it is a derivative of on-balance volume. Super. Okay. They both do the same thing. You only need one for confirmation purposes. Great, Jez. Thank you. And Bill, oh, great, Bill. Thank you. I think he's coming through with where else we can get accumulation distribution. So ChartMill, TradingView, FinViz, Bar Chart. Wonderful, Bill. Thank you so much. Those are free and with paid options, but lots of free stuff. Okay, great. Thank you. Bob is saying thank you. You appreciate, Bob, I thank you for attending, and I appreciate you appreciating the work that goes into this. And Gabriel talked about the promo code. It is there in that chat box. Okay, Bill, he forgot to mention StockFetcher. That's another service that's going to have that accumulation distribution. Wonderful, thank you. Jez says that TC2000 has that accumulation distribution as well. So we have lots of wonderful resources. Thank you for sharing, everyone. Great. Okay. Well, I don't see any more questions, but for those that may think of one later, please reach out via my website. You can reach our support team. They'll get me, and I'd be happy to answer any other questions that any of you may have. And I think unless there are any other questions, we are finished here today. And I appreciate you taking the time to review this. As usual, educating yourself is wonderful. Oh, John, let's see. Well, I see that link. If John, if you don't see it in the chat box, please email me and at support, and we'll get that link right out to you right away. gosh, sorry about that promo, but again, those that have not seen it and are interested, just go head over to meminvestmentresearch.com, contact us, and we will get that out to you right away. And Jez is mentioning, have I ever read Wyckoff? Yes. Yes. And actually on stockcharts.com, I am a top advisor, corner contributor. I urge you to take a look at some of my articles. They're very timely as far as the markets. So I'm actually one of the published advisors on stockcharts.com, and they do quite a bit of work with Wyckoff.